Hello and welcome to the Stock Specific class here for Thursday, December the 8th. If you have any questions during the week or any questions I don't get to here in the live class, make sure you send those to jerry@traderspro.com. I'll be happy to answer those for you. I hope I can get through the class today. I went to the Utah Jazz Golden State Warrior basketball game last night, and if any of you saw that game, if you haven't, go to ESPN.com and watch the highlight of how that game finished. Pretty incredible, one of the best games I've ever seen. Needless to say, I didn't yell much during the game, but at that last 5 minutes or so, I yelled as loud as I could, and I had lost my voice. So luckily it's Thursday, and this is the last class I have to do this week. But I'm going to struggle to get through today, and I'm going to probably sound pretty awful. So I apologize ahead of time, but I'm sorry I'm not sorry. It was worth it. That was a fantastic game. And like I said, if you want to see the highlight of it, go Google it, look it up, go to YouTube or something. It was pretty remarkable. All right. Obviously, we have a little bit of a rally today, but it's kind of a weak rally, as we'll see when we look at the chart. I still have my outlook that this is just a little bit of a attempted rally within the downtrend. The market is still looking pretty weak. I do recognize, though, that there are those big news events coming up next week that could move the market and could move it either way. We could see the market have a bigger rally off of that CPI report on Tuesday, the Fed meeting on Wednesday. I do think the CPI report is going to be a little bit more important because I think the market already anticipates what the Fed decision is going to be. I guess you could say the news conference afterwards would be important, at least for. Well, I don't even know if it'll be long-term important. Each of these events, what we tended to see is just a really quick burst of buying and then nothing after that, really. Excuse me. So it'll be interesting to see how, if we do drop a little bit further here, that we may not even rally back up above that trend line. I'll show you that here in just a second. If somehow that news is viewed as being positive. One thing I've been hearing a lot today, and it's kind of funny. There are a lot of people. This is why your best bet is to just have your CNBC on mute during the day. You can look at the little ticker at the bottom. But I have so many people out there that state the obvious. It's like the market's up today, so they give you 10 reasons why the market is looking bullish. The market's down the next day, and they give you 10 reasons why the market is bearish. They're almost telling you what you already can see on the chart or on the price action, and it really doesn't have much value. There are people I respect that come on CNBC. A lot of times it's because I can tell they're seeing a lot of what I'm seeing, and not that I need someone to agree with me all the time, but usually I can tell that they know what they're looking at. But anyway, before we get to the charts, direction alerts, still in a bear market. I told you with the selling we were having early in the week, we'd see these indicators back off. We've seen momentum again move into that hold range. All this means is that we're not in an overbought or oversold state. We could sell off further out of this. We could rally out of this. It could be that we're just pulling back a little bit. Maybe we're going to rally out this, although I'll show you my reasons for disagreeing with that argument when we look at the chart. However, I'll also give you an area that you can look at to turn more bullish if the market does start to rally at some point. Breadth indicator is backed off of that extreme, but it's still in the high range, but it's not overbought, so we can still go either way off of that. Sentiment is still right smack on the far right side. The sentiment is extreme. This is usually what you see at tops or near-term tops. So that's actually more bearish for the market when you see sentiment get that far to the right side. We are seeing on the buy-sell ratios that the sells are starting to outpace the buys a little bit. So they're crossing over right here. But again, as far as being extreme, no, these lines aren't too wide yet. So we could see more selling. We could see more buying. This could whipsaw back and forth. You see it happen right through here where the buying started to move above the selling and then it went right back down again. But we're not very wide to indicate that we're at any sort of extreme. And this other sentiment indicator is kind of in the midway point. Again, not showing us any sort of overbought or oversold condition. Let's get to the charts here. Man, this is going to be harder than I thought. I haven't really been speaking too much today. And as I started class, I just realized how bad my voice is. It really is. So bear with me. I'm going to be drinking a lot of water. So let's take a look at the SPY chart again. I'm going to go right to a long-term chart. We've been really focused on this downtrend line right here. It's hit it exactly right through here. It hit it exactly, and we reversed off of that. Now, that doesn't necessarily mean that it's going to lead to a lower low, as it has these last few times. It's hit it right here, went to a lower low, hit it right here, went to a lower low. But that's why we look at chart patterns, is we assume those chart patterns are going to continue until they don't, until we see signs that pattern is changing. And so if you're asking me from a probability standpoint, what I think, well, obviously it's acting like it's going to go to a lower low from here. That's what the chart is showing. That's what the behavior is. And so I'm going to assume that that's what it's going to do. Doesn't mean it will. We can't know exactly what the markets are going to do. If you think that technical analysis is going to tell you exactly what's going to happen next, you're going to be really frustrated. And I'll tell you right now, if you're just starting out and that's what your belief is, in that belief right now, you'll save yourself years of heartache and frustration if you think you're going to discover a software program, a guru to follow, or some sort of technical analysis technique that's going to tell you exactly what's going to happen next. It just doesn't work that way. But that doesn't mean we can't see the probabilities of what could be happening, and that's what we're analyzing. That's what I do every week when we have these classes. We're looking at what are the probabilities. And the probabilities are more likely right now that we're going to see a drop, possibly taking out that low and going to a lower low. Obviously, if we were to break this trend line, that would be the first time we would have broken the trend line during this whole decline. That would be significant. We would have to at least look at the possibility that trend was reversing. That's not necessarily telling you a high probability that the market's going to go up, okay? Because you're still in this downtrend, but it would tell you that the probability is shifting. That we could be shifting into an uptrend, and then you would start to look for other signals that would back that up. Do we break out above this high, go to a higher high right here, and then do we pull back and have a higher low? Do we continue to kind of stair step our way up? Now that's what we've been looking at. That behavior is also what we've been looking at in the near term. I talked about this on Tuesday, so I don't want to spend too much time on this, but we were reaching higher highs and higher lows just in this phase through here. Went to a higher high right here, and what was significant about Tuesday is we went to a lower low. We actually broke that near-term upward trending behavior. Now, we were viewing this as just being a rally within the downtrend. So the fact that we were reversing right at that trend line and went to a lower low right here didn't surprise us. It actually just, all it did was really confirm what we were already expecting. Now, again, we have an update today, and everyone's suddenly is talking about the market possibly going higher from here, or that was all the selling that we were going to see, and I just disagree. One of the things I look for is the strength of a move, and when you're in an uptrend and you have a pullback, but it's a weak pullback, it's slow. It doesn't look like it wants to drop very much, but it is dropping. That's very bullish. That's telling you the buyers are strong, and that you're probably getting ready to have that next impulsive move. That's why that ABC pattern is that corrective or choppy. You're pulling back, but you're not pulling back sharply. It's choppy, it's sluggish, and then that usually leads to that next burst higher. Well, the opposite is true in a downtrend. You get the strong selling, you want to watch how it rallies. Is it rally strongly or is it weak? And these last couple of days right here have been really weak. You throw the volume on here. Look how light the volume is today. Now, ultimately, you get a lot of volume at the end of the day, so it'll probably end up close to yesterday's volume, but that's still relatively light to where it's been, where the average is lately. And so, a rally on light volume, and especially if you close off the highs of the day, that's not a very strong rally. Now, that being said, we could see more than just a rally today. We could see another rally tomorrow. If you look back at this whole decline right here, now we're not going to see the details of this. You could zoom into these areas if you wanted to, but I'll show you the last one. Each of these, well, you can kind of see it right here. Every time we've pulled off of this trend line, we've had an initial sell-off, we've had an attempted bounce, and then we've had the bigger sell-off move. We had initial sell-off, we had attempted bounce, and then we had the bigger sell-off take place. We had an initial sell-off, an attempted bounce, and then we had the bigger sell-off right here. So we've got the initial sell-off. Is this the attempted bounce? Again, patterns. Look for patterns. It doesn't always mean that patterns are going to necessarily repeat themselves the same way. But again, we're looking for just an edge and an edge in probabilities, and that's the way that stocks decline. Is they have that initial sell-off, they attempt to rally back up, and so you can really look at the behavior. I'm really looking at the behavior of back in August 24th and 25th, right here. Again, this was where that trend line is. We had the initial drop right here, 2-day drop right here, attempted rally for a couple days, and then bam, look at that. You had this big drop right back down, attempted rally again. So I'm not suggesting that this is going to go straight down if we sell off. No, that's not the way things happen. You get these big sell-off days, but then you get these little snapback rallies. You got this little drop down here. You had 2 or 3 days where it tried to rally here and then went lower. So it's not going to go straight down. So again, that's what I'm saying. Here's that trend line. Here's the initial drop. Here's the little snapback. And again, could it go a little bit further? Sure, but also analyzing this, I talked about how we broke to this lower low right here. So that's significant. This wasn't just looking like a little pullback within this whole upward move right here. You could draw a trend line right through here. We broke that trend line. Now it could rally up a little bit higher. I'm looking at this area right here, and I'm going to say anywhere between about 400 to 402. If we get above this area, I don't really want to see us get above 400. It's a round number. The market tends to focus on round numbers, but I'll give it a little bit more leeway if it does go a little bit above 400. If it gets above 402, I think we have to. It will. I won't say it'll make the market look more bullish yet, but it will diminish the bearish expectation at the time. I'm going to be a little bit more worried about the bearish expectation. That 402 area lines up with these previous highs right here. that's still an area we could get to. And if we did, we rolled over there, that would give you a pretty decent bearish head and shoulders pattern, which is again, bearish pattern out there. It happens, it kind of happened right into here. It's usually the right and left shoulder are going to terminate in about the same spot. But they don't have to, which means this left shoulder could be, or right shoulder could be a little bit lower. And that would give us another day where it could possibly rally and then see if it rolls over and not get above 400, which I really don't want to see it do. To the downside, I want you to write down 389. $389 would clear this area of support resistance. And if we clear that, we're very likely to come down, at least retest the lows. Although you'd have to look at this area right here. Does that hold a support or, something like that? I just don't think it'll hold, but you do have to at least look at it for a little bit of a bounce or something in that area. But we're more likely, if we drop below 389, we're more likely to decline at that point. Although I think the way we're behaving right now, it's still acting like it's more likely to decline. But that gives you at least a number to look at and to give you a little more confidence that that decline is happening if it drops below that 389 area. All right. Now I'm going to go right to the VIX because I want to show you a correlation with the VIX as well that I think. Well, first of all, the fact we talked about this on Tuesday that we dipped below 20. Again, each of these areas at 20 lined up with that. Every time we hit 20, we recently, over the last 8 months or whatever, was when we hit the downtrend line. Every time we got up to that downtrend line, the VIX got down to 20 or below 20. So again, that's what gives me a lot of confidence that we're getting the same move here. But you see that the VIX is down a little bit today. We had a pretty good move on Tuesday, a little bit of a follow through yesterday. Even though yesterday was kind of flat, the VIX still moved higher. That concern is starting to build. We're not at fear yet, but that concern of a decline is starting to build. But it's very similar to what we saw right back in here. This was back in this right here where the VIX dropped a little bit, was that August 24th, 25th rally where it attempted to rally. Let me go back and show you in case you weren't paying attention. This right here where it rallied a little bit and then we got the big drop. The VIX went down right here. It went up a little bit right here, and then went down a little bit right here because it's going to move inversely. And then you got this big drop. So if we go back and look at, so we hit that declining trend line right through here. We started to sell off a little bit. The VIX moved up. We rallied a little bit. The VIX pulled back a little bit. We'll see. We don't know yet. It looks like it's reversing a little bit today. And then we had this big spike here where it dropped. And that's really what started to kick off that decline in the market. Now you see the VIX doesn't go straight up. It's back and forth too. But it worked its way up to that 30 area. When it got to 30, 34, then that's usually when we were hitting the bottoms, and we've seen the market rally off of that. But it's at one of these times we're wondering if it's going to spike to 40 and really show that panic selling. I keep talking about that. Believe me, I'll let you know when I see it in one of these updates. But the VIX is kind of confirming what we're seeing as well. If you want to draw a trend line down this side of the VIX right here, we've broken through that to the upside, which leads to a stronger probability we're going higher. Again, a lot of things pointing to this decline, but let me be clear. I have no problem shifting that if the market does something different. If somehow with these things happening next week, the market suddenly starts rallying, I'm not going to dig in and say I know I'm right. And, I don't care. I'm gonna stick to my guns. I'll trade the trend. We'll jump into some new positions for the portfolio. We'll trade that trend until we see it reversing. The other indexes are pretty much the same. The Dow, you can see, actually the Dow was trading pretty strong compared to the other indexes earlier today, but it's really faded right now. And by the way, I'm not saying we have to rally again tomorrow. If we really fade into the close, it could be ugly. Now, let me point out that if we sell off pretty decent tomorrow, remember something I always tell you, which is that markets don't tend to bottom on Fridays. So if we sell off pretty good tomorrow, it usually means we're at least going to open lower on Monday and maybe even trade lower on Monday. Just be aware of that. That's one of those kind of market behavior. It doesn't always do it, by the way. I've seen it where you have a big down Friday and it rallies, it gaps up on Monday. Like I said, nothing I teach you is going to work perfectly, but from a probability standpoint, that's a little tidbit that can be very helpful, particularly in little shorter term trades. I've done a ton of shorter term trades where put option trades, things like that, where the market's had a big down Friday, and I just done an over the weekend put option trade to expect the market to open lower than on Monday, and have done pretty well with that those type of trades before. So the Qs, again, same thing, kind of a weak rally today, but all these charts we're kind of looking for the same thing. Russell 2000. You can see the Russell has really broken that trend line up to here, really broke that on Tuesday. And look, the intraday high looks like it's kind of testing the underside of that trend line, and that's usually a sign that it's getting ready to roll over again. So, all right, bonds. I'm going to try to go through this pretty quickly because we did this a little bit more detail on Tuesday, and I don't know how much longer my voice is going to last. Bonds are still an uptrend, a little bit of a pause today, but we are getting into the extreme reversal risk area, though. However, what I'd be looking for here is not that the trends that bonds are going to suddenly start trending down, but that we could be getting ready for just a correction, and that would actually be pretty bullish if we kind of move a little bit choppy or sideways on a pullback. It would be a strong indicator that we've reversed into an uptrend if that happens. That usually will lead to another impulsive move up, and is usually a sign that you are reversing that trend. If we start to see a really sharp sell-off where we come down very, very quickly and dramatically, then that's an impulsive looking move. Not that you had a little bit of an impulsive looking correction here that went higher. Not that you can't have them, but that would throw a little bit of a curve to us to where we'd have to it would create more indecision at that point. We don't know if this is a trend reversal or this was just a weird looking correction within the longer term downtrend. It would be a little bit harder to read at that point if it were to drop sharply off of this pattern right here. So more of a choppy pullback would make a lot more sense if it were to do that based on what it's been doing over the last few weeks. Gold, I've been pretty bullish on gold. Gold dropped a little bit from our Tuesday class. We had our Tuesday class. We were talking about this little pullback here, but it looks like it's kind of working its way back up. A lot of this is going to, again, probably be tied to how the dollar moves. We'll look at the dollar chart here in just a second. But it's worth noting that, boy, if you back out and you look at a longer term chart of gold, and I'm only going back a couple of years here. Boy, if I could go back, let me see if I can go back a little bit further than that without. Sometimes it takes a little bit of time to load up these longer term charts. Let me go back about that far. I don't know if that'll, see if that can pull it up here. When you go back pretty far, you're drawing in a lot of data that the software has to kind of crunch. But yeah, this will show us. So you can see on kind of a longer term, you have this big run up. This looks like a gigantic ABC correction. Now, this doesn't mean that we're going to go straight back up to the top in 2 weeks or something like that. We're looking over several years here, but it looks like there's a good chance, and especially if we start to break out above here. This was a lower high on the way down. We start breaking up and getting higher highs and higher lows. It's really looking like gold could go on a pretty good longer term bullish run here, and so I think that's we started to look at some of the gold mining stocks. Again, a lot of them didn't have real high strength ranks, but you know, there's a pretty good evidence there that gold might have bottomed and it could be starting to trend up. And I think the reward to risk in this area is pretty decent. And then you add in the inflationary environment and the declining dollar, that it makes a lot more sense at that point. Now, it doesn't mean you won't have volatility. Anytime you're trading commodities, you can get some very volatile moves. So just be aware of that. But I still have my Newmont Mining stock in the portfolio. It's the only stock I own right now, aside from those inverse ETFs. So oil, we talked about this on Tuesday. We said, boy, what's this low got taken out, it's probably going to take out this low as well, and that's what happened today. We've gone to a lower low there. Tuesday we had taken out that low. Oil's just in a decline right now. I don't think that oil is going to collapse, but I do think it's trending down. And overall, it's been sideways for the most part, but it's kind of sideways to trending down right now. Let's back out to a longer term chart. and I just visually, I don't see another stop until right down in here, maybe around that $59 to $60 level. We could just call it 60 here on the USO. It's breaking this support. That's the next elevator stop on the way down. And so yeah, I think it could be working its way back down to that area there around that 60. So if we go back to a 6-month chart, let's take a look. Oh, we can't see 60 on here, but that's not too much lower really. But I don't expect. I'm not, like I said, I'm not expecting oil to collapse here. It's just in the near term, I think it's going to be a little bit more weak. I wouldn't want to be long oil. I got out of all my energy stocks, and a lot of them are still kind of declining and looking kind of ugly right now. So now that's been a good trade. The oil trade has held us up a little bit, the portfolio over the last year, and it's been leading the sector tab. You go into your sector tab right here. It's been at the top of that sector group for almost the whole entire year. It's just that now you want to be a little bit cautious because it looks like it's rolling over a little bit. Now we're going to look at this today because one thing we're seeing a lot on the new buy scan is a lot of biotech stocks. So we're going to go into the medical biotech sector today and look at some patterns that'll be the stock specific part of the class. Not that I'm saying go run out and buy a ton of these stocks, but I'll at least give you some patterns that look interesting. The dollar continues to decline. I think this recent rally was just a rally within the downtrend. You can kind of go back and you can kind of draw a declining trend line. It's not the best line right there, but there's been kind of a declining trend line. We kind of bumped up against it here. It looks like we're heading lower there. Now, again, the market over the last few weeks has been moving with the dollar, meaning that when the dollar's gone down, the market's gone up. When the market's gone up, the dollar's gone down, the market's gone up. Markets or dollar's gone up, market's gone down. Inverse relationship. It doesn't always do that. So we noticed that it was doing that, and we were paying attention to that. But it doesn't mean that relationship is going to continue. The trend of the dollar looks down, but the market also looks like it's rolling over and could start trending down. So we think they could start moving in the same direction if the market continues to sell off right here. We looked at the VIX, chip stocks. Now this is one thing that kind of concerned me a little bit. I talked about this on Tuesday, that could this be just a sideways correction? Previous move was up, that maybe the chip stocks go higher. It did hold the support area right here. So this is something I will be watching, as it tends to be a leadership sector. And if the markets look weak, but chips start breaking out or looking strong, it could be a bullish sign that maybe we don't drop. But I also will look to see if this is just a 1 or 2 day rally, and do we break this support level? If we break the support level, I think that'll confirm the downtrend. We'll probably see the SPY below 389. You'll probably have that day where you'll see the SPY below 389. The SMH is breaking that support level. All these little clues I talk about, you'll see them all kind of play out at the same time. But that would be confirmation, I think, if it breaks that support level, that things look more bullish. And on the flip side, if the market breaks out above SPY breaks out above 400, and you're seeing the chip stocks break above this resistance up here, it could be a lot more bullish. I'd have to shift and at least look at more bullish probabilities in the near term at that point. Transports, they've already kind of broken that kind of support area through here a little bit. Although you could say that with this intraday low, it's still kind of, but it went a little bit higher too. It wasn't real sideways there. It did go to a higher high right here. This looks impulsive down. So it makes me feel like this was the correction. This was the breakout. And then this is the start of the decline. This is the impulsive move down. We should see kind of a weak attempted rally if it tries to rally at all, and then heading lower. But that's something I'll keep an eye on too over the next week. Bitcoin, we talked about how we're expecting this one to continue to trend down. It moved a little bit sideways through here, as it did through here. This big decline here, had a pretty decent decline yesterday. We'll see if it has a bigger decline. I'd probably stay away from cryptocurrencies right now, just from the standpoint of you don't know which ones are going to survive all this drama. But they're continuing to trend lower. All right. So overall, again, I would say that the market is looking like it still looks bearish to me. But I've noted some of those things that could cause me to change that outlook. All right. In the portfolio, let's look at portfolio real quick, and then we'll get into some new patterns here. Again, we've been kind of stuck at this 138,000 area, 139,000, 137,000. We've just been stuck there for a couple weeks. That's okay. We're not losing money. We're just kind of holding on. If we do, you'll see this jump up though. We're positioned pretty heavily for a move down with these inverse ETFs, and so that'll jump into probably 145, 148,000 if we get a pretty decent sell-off. We'll change that a little bit, at least based on how we're positioned. Now, if we rally strongly from here and we have to stop out, we could drop a little bit, but I think we're going to be fine and increase the portfolio at that point. Newmont is the one I'm still holding, the gold, the individual gold stock. I talked about how it was lower on Tuesday, but it looked like it was kind of holding this breakout area. So this is what I'm talking about. This is more impulsive. This is more of a corrective. It's kind of a sluggish pullback. It doesn't look like there's really heavy sellers right there. It's just maybe a little profit taking from that initial move. But it looks like that's a pretty bullish looking pullback right there. And it seems to be holding this breakout as support. What used to be resistance through here, what used to be the ceiling, is now acting like the floor. Today, we'll see if it starts taking off again. And if not, I think I have my stop down below here, so I think I've given it plenty of room to kind of find its way higher there. But again, it looks really subtle right here. But I love these type of patterns where it looks like you're moving from the left side of the bowl to the right side of the bowl, and now you're starting to move up. You're starting to see higher highs and higher lows. Back here, you were seeing again lower highs and lower lows, and then it kind of had a lower low right here, and then suddenly had a little bit of a higher low, an even low. You had one more lower low and lower high, and then you had this nice sharp impulsive move up, gave you higher high, higher low, higher high. We'll see if this ends up being a higher low. But these are real subtle things that take place. If you know how to see them and read them, it benefits you. If you don't, then you're guessing, and you're probably basing your trade on something else, which is fine. But as long as it works. But when you can learn how to read price action, read charts, I'm telling you, you start to feel like, well, it can be dangerous because you start to feel like you know what's going to happen next. And the market always has a way to remind you that you don't from time to time. And it's usually when you get your most cocky and confident that it humbles you. That's why I've always said you never, ever, ever want to follow someone that's cocky and confident and, oh, the market's going to do this. I know it's going to do this, and jump behind me on this. It is going to happen. You never want to follow those type of people because it means that they either don't trade or they're just starting out themselves and they've never been beat up. You always want to follow the guy that he's confident, but he's cautious. He's like, the charts, I have a lot of experience, and the charts are really looking like they're going to go up right here. But, man, I've been beat up being that confident before, and I've been humbled before. And so you have to take that into account. Those type of people I love to listen to because I know they trade, and I know they have experience, because you can't be cocky and have gone through getting beat up in the market. It just humbles you. So those are the people you want to actually listen to, are the ones that are confident, but they're also a little bit cautious, and they always add in that, well, you never know what's going to happen though. Then you know that they know what they're talking about. All right, so Newmont's the only stock we're holding now. I do want to point one thing out here, because I like to do this sometimes. We've already analyzed we've analyzed the SPY. We just got done doing all that, and I showed you all the little subtle things that made me believe that we're heading lower. But if you find that there's a natural tendency for people to be bullish. In fact, when new traders come in, they almost always are, they're always bullish, because mostly they don't know that you can make money when markets go down. And so it's kind of like you have to be bullish if you think you're going to make money, right? When they learn that you can make money when markets go down as well, it changes everything for them. But there's a natural human nature to be bullish on the markets. And so when I start teaching people about bearish patterns and things like that, sometimes it's hard for them to see it. And it's hard for them to buy in to there's still a tendency for them to want to ignore this and say, yeah, but I'm going to focus on this more, and I think this is the time where it's going to break it and go higher. There's a tendency to just ignore what they're reading and just go with that natural, normal bullish bias. If you feel like that's a problem for you and you've run into that before, one thing you could do that might help is to look at an inverse ETF chart of that index. Now we're in one right now in the portfolio. Now this is a leveraged one, but let's look at SPXS. We have a position in SPXS, and let's back out and look at that 2-year chart. By the way, this chart should look bullish to you. I can look at this longer term chart and I can say, boy, look, we've declined right here. We've got a higher low right there, a higher low right there, a higher low right here, a higher high right here. It looks like we're moving up the right side of the bowl right here. And this thing looks like it's getting ready to go higher. Remember, we're looking at the upside down of the index. Maybe a better one, though, is to look at the SH, even though we're not going to trade the SH. This is a leveraged one, so this chart might look a little bit different. Let's look at the SH, which is just the straight up inverse. But this one even looks more bullish. I mean, look at that. You're looking at this, you're saying, okay, here's your decline, and higher lows, higher highs. I could draw a trend line right through here, and it's bouncing off that trend line. Like I said, it looks like it's coming up the right side of the bowl. Well, what we're looking at is the upside down of the S&P 500. So if you're having trouble seeing the bearishness of the S&P 500, and I do this sometimes because I do this as a double check sometimes to just make sure I'm not letting my bias creep in too strongly. I'll go flip the chart upside down. You can't do it on too many charts, but let's do it on the SMH, the chip stocks. This is that inverse ETF of the chips. Let's see how it's looking for us. Well, you had this decline right through here. You went to a lower low right here. You broke through that trend line, and then you're kind of consolidating right here, right? Oh no, not the SMA. No, the excuse me, I'm looking at the wrong one. It's the SOXS. Well, actually, let's look at the SMH in the longer term there, because that is something that we are looking at. Remember, I told you that that was part of the problem, is the SMH was looking more bullish because you had this impulsive move up and that corrective move down. If we draw this trend line out, let's see if I can draw it better this time. We've kind of broken above that trend line. Now we're consolidating. This actually looks like it could be pretty bullish. And that's why this support's going to be so important. If it breaks that support, it'll be back down below that trend line, and it'll be more likely it's still heading lower. But that's something to keep an eye on, though. But anyway, you can throw in these inverse ETFs and kind of look at the flip side of it, the upside down version of it. Sometimes it's a little bit clearer when you do that. Sometimes it isn't, and if it isn't, then okay. But it kind of helps you double check your bias. You know, are you developing too strong of a bias? Are you trying to fit everything into that bias? Because there's a tendency to come up with the conclusion that the market's going to go up, the market's going to go down. Then you start looking for every reason why it's going to move in that. It's going to continue to move in that direction. And and you ignore the clues that are telling you it isn't. Okay. All right. All right, let's get into some trades here, and then we'll wrap things up. Now, I do want to kind of we've been kind of going into the muscle stock scans, and we've been looking at the new buys, and that's fine. And you know, what benefit of doing that is what benefit that we've seen over the last little bit is that what it can do is it can tell you, it can show you some sectors that could be on the move. What have we started to see in this new buy scan? We've seen a lot of these biotech, pharmaceutical type companies showing up. Cardinal Health. And even though if you go over to the sector tab, the sectors are, you know, the biotech medical sector is down quite a bit on that list. Now, in normal bull markets, the process of what we go through to find trades is we usually look at what are the top sectors, and then we usually look for the top stocks within those sectors. And a lot of times I go into the hold section because what I'm looking for is a nice pattern that I can see, nice bullish pattern on a stock that looks like it's going from hold to buy. So if it's already at a hold, then I'm waiting for it to go to a buy signal as confirmation to look to get in. Okay. Now we haven't been doing a lot of that because we've been in this bear market, but I kind of want to show you a little bit of how I would do this. Although I'm going to move down the list, and we're going to look at the medical sector. Now you can say that's, you know, why are you going so far down the list there? Well, partly because what do I want to stay away from right now? What's been getting beat up? Oil stocks, energy stocks, and bank stocks, and utility stocks. That are looking more bullish. So let's check it. Everyone hear me okay? Sorry, the audio got cut. Someone can let me know if you can hear me. I just want to make sure I'm not going to be talking to myself for the next 10 minutes or so. Someone give me a quick thumbs up or something if you can hear the audio here. Okay, sounds good. All right. So we're going to let's go into that medical sector. And like I said, I like to go into under the hold section because if I see a pattern that looks like it's developing, then a lot of times you can check the buy section. I will, but a lot of times, sometimes you'll see those stocks have already made the move. We're trying to capture the move as it's about to happen, and so that's usually where your best bet is to capture that move is to look in the hold section here. So we're going to click on that. And I'll start going down the list. Now, I can tell you right now, I tend to avoid stocks under $5. They're usually down below $5 for a reason. They're either a startup and especially in the biotech industry, you get a lot of startups that go belly up, a lot of them. So if you have these wild dreams of buying a stock at 31 cents and having it go to $50, I'm not saying it can't happen, but it's like what are my chances of putting a quarter in the slot machine and winning $1 million? Could it happen? Yeah, it could happen, but is it likely to happen? Hell no, it's not likely to happen. That's why these casinos are huge and lavish. They make money. You lose the money. So I don't like to take chances on them. So I usually look for something over I like to you just kind of start at least in the $10 to $15 to $20 range, or even higher than that. That lets me know they're a little bit more stable. So I'd probably avoid some of these ones at the top of the list. But some of you, that might be your thing. You like to buy into some of these penny stocks and gamble on them and hope they turn out big. But I'm just letting you know right now, I tend to shy away from that. So I went down the list. I found this 99 strength rank VRNA right here, Verona Pharmaceutical. And we can switch this over to the signals here. And it looks like to me, it looks like a pretty nice, what we call cup with handle pattern. You got the cup shape right here. You got the handle right here. Now, the rule of thumb with these, and this is in this market environment where it looks pretty bearish, you might want to wait for this confirmation. I would wait for it to break out above here, because if it can break out above the top of the bowl, the rule of thumb is it will tend to move up the same distance as the top of the bowl, the bottom of the bowl. So you can take that distance, project it upward, and it gives you a minimum target. It doesn't mean it's going to go there and stop. It doesn't mean it's got to get there. It doesn't mean it can't go beyond there. But it has a tendency to make that measured move a lot of times. That's why I teach it. That's why we see it time and time again. It'll make that move. So that's a nice looking pattern right there. You could, if you didn't want to wait for the breakout, you could wait for this to go from hold to buy. Although again, this technique we'll use it a ton in a bull market. It's just that we're not in a bull market right now. So I haven't been looking at entry techniques just off of the buy signal a lot on a lot of my trades recently, particularly the portfolio trades. We're just, the safest place to be is in cash. In a bear market, most of your money should be in cash, which we are. The portfolio there. But if you are going to trade, you're just trying to see if you can grind out a little bit of money while you're waiting for the next bull market. Another one in this list, go to sectors and then medical sector. Let's take a look at this AKRO, Akero Therapeutics, 98 strength rank. Looks like it's had a nice little run up. See the whole chart right here. And it has been moving a little bit sideways, but I like, not only is it moving sideways, but you're getting that slightly higher high, slightly higher low, moving up a little bit today. Again, if this thing can continue to act bullish, if it were to drop to a lower low right here, because we don't know if it's a higher low yet, but it drop below that, I'd probably stay away from it if it does that. So in other words, if it can kind of break out above here, I think the market would probably be also looking like a stronger rally at that point. But the market's been trending down. This has been trending up during that period of time. So, actually, this probably lines up with the recent rally in the market. So maybe it is still moving a little bit along with the regular market. Let's look at another one here. IMCR, 98 strength rank. Now, typically in the strength rank, I like to stay above 90. I like to usually be a 98 strength rank or above in a really strong bull market. I don't usually like to dip down below 95 in a strong bull market. If you're in a weaker bull market or coming out of a bear market, you can drop down to about 90. I usually don't like to go below 90. Now, there are exceptions. I'm in Newmont Mining. Newmont Mining is an exception. I'll come back to that, Newmont Mining. But let's look at this one right here, IMCR, 98 strength rank. Nice uptrend right through here. This looks corrective. It looks like it's pulled back in a very choppy kind of fashion. Bullish day yesterday, a little bit of a flat day today, but it's acting like an uptrend. And And so if you're gonna buy into something in this market environment, buy into something that at least is acting like an uptrend. I also like I talked about these, and we've had these in the portfolio before. If you're new, you haven't seen them, but into the aerospace sector, I really like the top two here. Northrop Grumman has pulled back and gone to a hold, actually gone back to a buy today, I think, and Lockheed Martin. Both of these are really good. Now, you had a big sharp dip down right here. This is what stopped me out. But it's come back again. It's looking like it's getting ready to break out again. Got kind of a V-shaped move. Went back to a buy signal today. Again, you want a fundamental reason. These countries around the world are madly ordering weapons to protect themselves, and these companies are going to make money for years going forward, as long as they manage themselves properly. I mean, obviously, you could be making money and running your company into the ground if you're not managing it properly. But these are usually pretty well run companies. I also like Lockheed Martin out of that sector as well. In fact, I might even like this one a little bit better. It started to break out right here. It had this little pullback. It's been holding up. And notice how the dip in this one wasn't as big as the one on Northrop Grumman. This is one, though, I think is getting ready to make another run. The only thing that could hinder that is one thing I talk about. This is why we analyze the markets. If we do get a bigger sell-off right here, when you have these big sell-off days, everything drops. There's almost nothing that rallies in those days. People they sell. They're not looking to reasons to hold their positions. They're looking to get out as quick as they can and protect the gains they have, or reduce the losses that they're incurring. So that's why I'd be really cautious. Even though I'm going through trades today, potential trades today, just keep that in mind that if you're going to place these trades, make sure you have a stop, a well-defined area that you're willing to risk, because there could be a good chance you end up getting stopped out on it. It doesn't mean that it's still not a good company, because it could be that Lockheed Martin sells off at the market, comes down in here, and maybe this is just a large ABC pattern, and then that'd probably be even a better buy area on the breakout area back here, and it could give you a better entry point. And it could sell off the market, maybe not as far, maybe doesn't go to a lower low like the market could, and then if the market somehow bottoms out or whatever, this could be really taking off if the market starts moving higher. So just be aware that even if this does pull back with the market itself, doesn't necessarily mean it's one that you would avoid completely. You just maybe look for a possible better entry point into the trend, and it could create a better entry point into the trend. All right. Question: wouldn't you wait for wave C on LMT? You could. Like I said, you're making an assumption that the market is going to sell off. And I'm making that assumption too, but it doesn't mean it will. What happens if we break above 400 on the SPY and Lockheed Martin breaks above here? Who knows? It could start taking off. And if you're looking for something to trade, if we do break out, this breaks out with the market, this would be one that I would probably jump into. But yeah, absolutely. Could you wait for it to possibly sell off with the market and create a wave C down here? Yeah. That's just what I said. You might have typed the question before I said it, before I said you could wait for that. But yeah, like I said, I'm not getting anything in the portfolio. I don't recommend anyone getting anything in the portfolio right now, but I only have I could have a 15-minute class on Thursdays if I'm not going to go over any potential trades. And there's people that are tuning in specifically for that. I'm not saying there aren't potential trades. If you're dying for a trade, you want something to trade, well, then these are trending stocks that are trending up and looking pretty good and have high strength ranks, and that's what you would want to focus on. Not that it's going to work out for you, but I gave you a trade, and I'm trying to give you the strongest one I can find here. Yeah, I wouldn't really be doing anything right now. Market's looking weak, still in a bear market. We don't want to be doing too much in these conditions. All right, that's all I have. Have a great weekend. Hopefully next week I'll have my voice back and it won't be as painful to have this class. And we'll see you on Tuesday for the next market update class. Bye, everyone.